What is up? One heck of a day today. You're going to have to forgive my voice here. I'm struggling with it, but we have to talk about what happened today because Starbucks absolutely plunged. About 3 months ago, I put out a video where I told you, hey, I wouldn't be looking into Starbucks right now. It's probably not the stock you want to be investing in. And the reason that I said that, it's a 10-minute video, and I gave you all my opinions on why I thought this was a bad investment to make or a stock that I was at least going to avoid. I put a bunch of time and effort into looking into this company again, and I said, man, I just don't see a good investment here. Well, the markets confirmed that today. The stock price at the time, we put this video out. Let's see. First video came out February 5th. And stock price at the time was $94 a share. I want to bring this chart up. I'm going to share my screen here. And you can see that stock price as of today is $74. That is a $20 drop in 3 months. That is a huge move, greater than a 20% move in 3 months. That is a gigantic drop. And I want to talk about why. I went over a lot of these things in the video, and I will link the information in the description below. I haven't yet, but I will after I finish up with this video. So if you're watching it after this is live, the information should be in there. But I went over a ton of reasons why I thought this stock was going to have some problems, some reasons why I thought this stock was potentially going to have some trouble. So first, taking a look at this chart right here, we are really zoomed out. So here's the 2020 low, and I put basically a major trend line in here from the 2020 lows all the way up to today, basically, counting this bottom that happened here about 2 years ago. So we have this major trend line, and we had bounced off of it. It had been support. Things were looking good. Well, Starbucks reported today, and the report was not good. Everything I was talking about in that February video is basically coming to fruition. Now, I don't want to try to just pat myself on the back. That's not the point of this video. The point is we want to talk about what is happening because it's not something that's just going to be isolated to Starbucks. I think you're going to see this transcend Starbucks and move into other companies that are in a similar line of business, right? So Starbucks is just kind of the pinnacle of this iceberg. And let's go over to this article really quick. So this was put out by Market Watch. And let me get back to the right point in this video. Okay, so Starbucks Corp, worse than expected quarter and grim predictions for the year brewed a mix of discontent and hope on Wall Street, with the poor showing leading to rare stock downgrades for the retailer. So they end up missing. There's a surprise quarterly miss, so people weren't expecting this to happen. But here's what I want to point out from you. It's right here. First of all, there were several articles. I liked this one the most because of this line in here. Deutsche Bank analyst Lauren Silberman cut their rating on Starbucks stock to hold from buy, saying that grande headwinds Starbucks is facing are more pervasive and persistent than they expected. And this is what I really wanted to talk about. We still see Starbucks as one of the highest quality global restaurant companies trading at multi-year lows, though given reduced visibility into the timing and inflection of earnings, we believe risk reward is balanced. Okay, so it says, whoops, let's go a little farther down here, that they downgraded their rating as well. So William Blair, Sharon Zakfia also downgraded her rating on the stock to equivalent of hold, thanks to a stunning across-the-board miss on key metrics. All right, so I wanted to show this part of it right here. So Starbucks shares dropped more than 12% in after-hours session on Tuesday and was losing another 16% on Wednesday, on track for its lowest close in nearly 2 years and its largest one-day percentage decrease since April of 2000 when it fell 18%. Despite these steep losses, which have amounted to a 23% decline so far this year, Oppenheimer analysts said in their note Wednesday they were unable to recommend buying the pullback. Now, if it drops 23%, you would think, hey, this is a good company and everything's looking good moving forward. This is an opportunity in front of you. But as I talked about in that last video, I don't think this is an opportunity to be buying in necessarily. I think that as long as this holds, let's go back to the chart real quick. Sorry again about my voice. Really wish that it wasn't quite as bad as it is. All right, if we zoom in here, you can see that we broke major support. Now, unless we come up tomorrow and we're back up in the $85 range, which I don't think is going to happen, I think this support line is gone. We would need to close and then confirm it below. I think it's going to be really hard to regain this in one day. I don't think it's going to happen. And so I think there's probably some return here on the price, but then you are no longer using this as support. And I think there's a ton of downside potential at that point. I think this stock has, now you can see that it's finding support in this range, which makes a lot of sense. But still, I think this has downward movement ahead of it. And it's not a stock that I want to be holding, even at this highly reduced price. Now, I talked about all the reasons. I'm not going to go into everything about the company, but really what was talked about today, the discussion came down to consumer sentiment and what was happening to the average person who usually shows up to buy a cup of coffee. And that is that they are absolutely getting smashed. They're getting destroyed because they were showing up. The casual consumer was showing up and they were buying a cup of coffee on a semi-regular basis. Well, that casual consumer is gone. What their data is saying is that the people who are kind of in that middle ground, who have been able to be like, hey, things kind of suck financially, but this will pass, are realizing financial conditions are not passing. Inflation's not getting better. My bottom line is not getting better. My checkbook doesn't feel better. And I am getting destroyed. I have to start pulling some things out of my budget. And so this is what we were talking about 3 months ago on that video, where I was just saying, I don't think the consumer is strong enough. And Starbucks is kind of the top tier thing, the first thing you're going to be able to let go of because it's a luxury item. It's an extra, excuse me. Now, because it's an extra thing and because it's not something that you need on a daily basis, you don't like a lunch is something you're going to need, right? So a company like McDonald's, even though they are also feeling this, they're going to have someone that chooses, yes, I need lunch. I'm just feeling a little lazy today. Okay, I'm going to buy lunch at McDonald's. Whereas Starbucks is different from that. Starbucks is, all right, I want something extra. I want to like have something in my day that feels special, like a treat. This is an extra expense that I don't have to put on my books, but I'm going to go ahead and choose it because it's fun or I enjoy it or I'm going to go meet a friend there or whatever. So that is an extra expense. And the consumer is so battered right now financially that the McDonald's expense, okay, we're going to allow that because it's lunch, it's a meal. But the Starbucks expense is something I don't have to have right now. Therefore, I'm going to let it go. So I think Starbucks, not only are they dealing with that, okay, the other funny thing is that they blamed bad weather as a primary factor, not the primary, but one of the primary factors that led to lower earnings this time around. Now, the consumer is getting destroyed. The weather, sure, maybe that played a small factor in some regions for a short portion of time, but it's hard to say that a global company is having a huge setback due to weather, right? You have so many potential sites for people to be buying your products that it's hard to say, hey, some localized weather events in the Northeast or wherever it was, those snowstorms, that really put us back. I mean, yeah, it's going to have some effect, but there's no reason why you should be highly downgrading even your future forecast on this kind of a thing. So I really think this is a stock that if you're looking at this and you're saying, hey, here's an opportunity to buy, there probably is some kind of a bounce coming in the next day or two. However, I am not going to be taking this trade at all. I think there is potential downside still, even with this gigantic drop today. Now, if you wanted to play this, you could consider seeing what it does. And if you start to get a little bit of a buy-in tomorrow, this could be a very short-term trade. However, it's not one I'm going to touch. I think the sentiment on the stock is bad. I think the fundamentals on the stock are starting to show the cracks. It's starting to slip. And this is not one that I want to touch because I don't have great confidence that we're going to see a bounce right now. If I was going to be looking for a bounce, I'm going to be actually looking even lower. So if you get down into this range, so we're at 40.74 as of today. I might be looking somewhere down in here. If you tie this up, you could kind of find a couple of ways where it finds some support. However, I still just think that it's pretty tough to say that this is the point it's going to bounce. If anything, I could see it coming even maybe a little bit lower to maybe 71, something like that. You don't have a ton of support here, but enough that I could say, okay, here's a hit here, here, coming right through here. And so potentially you could see a bounce right in this range. However, I think even if it does bounce, it's probably going to be fairly weak just because the downgrade was significant. You have multiple companies that are coming out and saying downgrade this. And then just what the company is projecting moving forward is a major decline in those revenues from what they had projected originally. They were talking 7 to 10% growth in revenue. Now they're talking maybe 1 to 2%. And that is a gigantic change in the forecast. By the time you put in inflation, you're really not doing much as a company. And I think with what's happening to the consumer, this is just, in my opinion, even more of an avoid. So 3 months ago, when I put the first video out to tell you, be careful, I think bad things are coming. Now they've come. I think the bad things are just getting started. You still have union problems. You still have issues with cost. You still have issues with the consumer. So this is one I'm just going to step back on and let it fall. I think there might be a point where it becomes a buy if it really, really plummets. I mean, if you're talking like another 20%, maybe at that point you could go, okay, now the upside potential, even though this is something people are going to be cutting out, becomes high enough that the reward is worth the risk. At this point, I don't think I would be touching this company. But if I was going to make a short-term play, I might look for a bounce here. And if it starts to bounce, get a short little move, probably just a few dollars per share. And then I'm going to be out on it again because I think what it'll do is it's probably going to create a bear flag. We're going to have a drop. We'll have a little bit of consolidation and then likely going to go again. But we'll see. And this is, I don't do a lot of day trading. I don't do a ton of these short-term trades. I will make them, but they're pretty rare. And I think without seeing that, I want to see more of that pattern forming before I make the buy. So this is such a huge move. Likely we're going to see a little bit. So if you're going to play it, maybe play it up into this. I would say probably into this, maybe 75-ish is kind of the max that I'd be looking for. Let's see if we were to make some connections here. I'm going to say it's probably going to be somewhere in this range. So that's not much of a move, right? And I would say that the downside risk is pretty substantial. So if SBUX is a company that you're considering at this point, I would really get onto the sidelines. If you haven't checked out the first video I did in this company, I'm going to put it in the description below as soon as this is done and give you a chance to watch that. But that'll give the full breakdown. Let me just pull this up really quick, and I'm going to go ahead and take a look at their financials. Let's see here. Why is this not going? Oh, I'm already on SBUX. That's why. Okay. I did want to show you just on a quarterly basis here that we're starting to see this like turning. So if we go to free cash flow, we talked about this last time. We have kind of this like flat pattern that's been existing for quite a while, and we're not seeing a huge drop, but we are starting to see a little bit of a drop. You're seeing the revenues starting to curve towards the downside. Your earnings per share starting to move to the downside. So your net income, you're just seeing a lot of this downward trend, which is not something good that you want to see as an investor in this company. And as far as this ratio, so this ratio was pretty good, and you can see coming down, margins starting to get a little bit thin. This is your return on capital employed. You don't want to see that shrinking. That's not a good thing for this company. And so this is, again, just a quick overview. If you're considering holding it for the long term, I would want to see a lot more of a drop in this because you're starting to see the wrong trend in these major factors, right? If the revenue is going down, the free cash flow is going down, earnings per share going down, net income going down. You don't want to be buying into this dropping pattern. You want to maybe see it start to correct again. And then if you start to see it correct, that's where I'm going to be like, okay, where's my price? What is the risk? And the thing that's nice about this is a dividend paying company. So as of right now, you're getting 2.5%. I think if you were to get down low enough that you're starting to see maybe like a 4 or 5% return. So you're going to need to see quite a bit more reduction in the stock value. But then you can start to say, okay, I've got a nice dividend. The company's probably not going away. It can probably recover some of these margins eventually. I don't know. It would have to go on sale quite a bit more than it currently has for me to be interested. But if you're looking at the long term, I would say watch this company, see what it does. I wouldn't be buying it now. I don't think we've seen enough of a discount for the direction that it's heading. And you might need to see a lot more blood in the streets, so to speak, before you're ready to buy into this company. So like if we go back to 2020, for example, let me just I'm going to bring it up on the chart here. All right, so let me go to a 5-year view. Let's zoom this thing out. And okay, I went way too far, but let's go to this 2020 move right here. And we'll stretch it out. And let's just do a measurement of what this looked like. All right, so here is January to start off the year. Let's go off of, let's go the kind of the end of February, and we'll do a little bit of a measurement here. So we're going to go end of February, which is just kind of getting into everything. And what we saw for the lows from COVID, you end up seeing a 43% run. Now, I'm not expecting a 43% drop, but this is the kind of thing where you go, okay, this has become too discounted. Now, the factors in the world were very different. This wasn't Starbucks as a business is having problems. This was the world is shutting down. Okay, so I'm not expecting 43%. However, I would expect from where we're at now to see quite a bit of a drop even still. So we've broken down, we're down to here, and this move initially, let's go from the beginning of the year. So let's zoom out just a little bit here. And let's go November, January. All right, so we're going to go right in here. We'll call this the measured move here. All right, so far we're showing 24%. I'm thinking probably this 30% mark is where I'm going to start to take another look at it, which is showing about $68 a share. That's another $6 that I would want to see fall off of there. And you can see that if I put this on, this line right here, this is kind of the bottom. Let's see, this is 22 off of the lows when the markets were coming back down. And you can see that that's about the point. This is where I'm going to really start to get interested in just reevaluating and going, hey, have any factors changed? Is there anything that's different now where I should reconsider or maybe look for that bounce? You've got some normal support coming in, plus you've got a 30% total drop from this high. And so, or let's see, we were right here. So now you're looking at this position where, hey, this has really gone on sale. We're probably going to see some run. And while it's running, I can collect some dividends. That to me is a much more attractive position to be in than to go, wow, it fell so much, it's guaranteed to come back. I'd rather play it that way than to play this short-term move. So if I was going to do it, that's what I would be looking at. All right, that's what happened with Starbucks today. Wild day in the markets. Was not expecting that to happen, but thought I would at least share with you guys what's going on because it's fun to make a prediction and then watch it unfold. If you haven't seen that video, linking it down below. Thanks for being here. Thanks for watching. Have a good day. I'll talk to you next time.